Hey, hi, this is Joe with PrepAgent. I'm here with my friends Matthew and Laura. How you guys doing?
Good.
Great, great.
When's your guys' exam?
Sunday.
Sunday. That's soon.
Yeah.
For those of you guys who don't know, today's Friday for us. We're talking 2 days. So hopefully this is a review rather than teach you guys from scratch, right?
Right.
Yep.
Now I'm going to tell you something I tell a lot of people when it's coming really close to their exam. What are you planning to do this weekend before your exam as a way to get
We have
ready?
class on we actually have class on Saturday still, so we're still going to be learning some new information on Saturday. But basically we've just been kind of doing everything. We have flashcards and test questions. We've been reading off your site and watching your webinars, and I think we're planning to do a little bit of math on Saturday night before the test on Sunday.
Can I recommend something for you?
Yeah, please.
Nail down the vocabulary.
Okay.
When your exam is really soon, time is of the essence, correct?
Right.
Mhm.
That's a
When you,
vocab word.
yeah, vocabulary is super important. I tell people the first thing you should do with the vocabulary is also the last thing you should do. Because if you think about it, when you do a question, a practice question, how long does it take you to do that question? Let's call it you read the question, you even know the answers. You're talking what, 30 seconds to do it?
Yeah.
Yeah.
How long will it take you to look at something and say real property, immovable? How long would that take? Like 5
2
seconds?
seconds.
2 seconds.
Yeah.
Two
Yeah.
seconds. So the amount of ground you could cover by doing vocabulary will be a lot more if you do a question. And if you get a question you don't really understand, you may spend 30 minutes on that question, researching, trying to figure out what it's all about. Well, in that time, you could have nailed down like 30 vocabulary things.
Right.
Yeah.
The other reason is when you do practice questions, how do you go about doing them when you do the practice questions?
We usually go through them, each of us answering, and then in the end we correct them, and then go back through and reread the question and what did we get wrong? What did we select? What was the correct answer?
Yeah. Kind of discuss it at that point.
Okay, here's what I'm nervous about when you do questions, especially when it's right before your exam, is you look at a question and you see four options. You're mulling over the four options, correct?
Right.
You're taking in wrong information.
Right.
And let me clarify.
Yeah.
If it asks you what color is the best color, the options are red, blue, green, and yellow. Okay? The answer may be blue, but you're sitting there going red, yellow's great, blue, green. Oh, I like green. Yeah, blue. It's blue, and you got it right. But then when you take your test and you're thinking, okay, what was the best color? You're sitting there thinking, God, I remember talking about yellow. I talked about yellow a whole lot. Was that the wrong one or the right one? I just remember talking about it. You remember talking about yellow? Yeah, yellow. I'll go with yellow. You understand what I mean? It like sticks in your mind.
Right.
Yeah.
And when you do vocabulary, you're only looking at correct information. So to take that same example, if you do vocabulary, what's the best color? Blue. All you learned was blue. You didn't take in anything else. And that's a very simplified example, but I hope you get the concept of what I mean.
Yeah. No.
Yeah. No,
For sure.
very understandable. Yeah.
Yeah, you're not mulling over and struggling with bad information, if that makes sense.
Yeah.
So with your test coming up that soon, for you and for anybody listening to this, please try and get down that vocabulary so you're only taking in correct information. You don't want to be mulling over and contemplating wrong information this close. All right?
Okay.
Yep.
That's my tidbit of the day. So now that
Like it.
being said, you guys asked me a question. You asked me a question. What are the differences between FHA insured, VA loans, and conventional loans? Would you like me to start this party or do you want to start?
You start.
Okay. So, first off, let me ask you something really basic, okay? What's a loan?
Uh.
Oof.
Money borrowed.
Yeah. Yeah. Money borrowed. I mean.
Okay. I'm looking for a word that starts with an L and has one, two, four letters.
Lien.
Lien. A loan is a lien. Okay. Have you ever heard that word before?
Yes.
Oh yeah.
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 Okay, what do you know about that word?
There's voluntary liens, involuntary liens, and I guess a mortgage is a lien, and so it's a voluntary lien.
Okay, good. So it's a
So
voluntary lien. Is it general or is it specific?
it is specific
Why?
because if you don't pay it, they can come back and take your house, and that's one specific thing that they can come take.
Good. You've clearly been studying. You're ready to go. What would be an
We
example?
have been.
Yeah, what would be an example of a general lien?
Like a judgment lien where you go to court and you haven't, you have some, as a defendant, you are required to pay some kind of restitution or something to somebody, and they say, well, we're going to take everything until you're paid up.
Okay, so you got that general lien, you got a specific lien. You said that they could take your house, right, in a specific lien, and you get a loan, correct?
Yes, sir.
That sounds horrible for the bank, right?
Right.
What do they do to prevent that? So they give you a loan. They're like, you know what? We're lending you this money, and we want you to pay it back because we don't have to do this whole foreclosure thing. That'd be horrible. But we're a little nervous. We don't know you that well. We know you well enough. We want to lend you the money. We don't know you that well. So what's the bank going to do?
Make you put money down.
Okay, good.
Not a limit.
Or some people might have to pay like mortgage insurance, like primary mortgage insurance for people who are like maybe a risk factor.
Good. So if you guys, now what kind of loan is that?
What kind of loan is what?
What you're talking about, where you have the 20%, you have to put money down, and there's
Conventional
no
loan?
a conventional loan. Good. Which maybe I could have phrased that better, but you hit it perfectly. Where we're going with this first thing is conventional loan. So what are the difference between FHA insured VA loans and conventional loans? So that little blurb leads us to what you just mentioned, a conventional loan. Okay.
Okay.
And these are things you should not only understand for your test, but it's also important for you when you practice real estate. You guys probably heard that thing where none of this you'll ever use. You'll never use any of this. You heard that before?
Yeah.
Oh yeah.
Whoever says that, I hate them. Never talk to them again. They're horrible people. Okay? Because
Okay.
one, in no way does that motivate you to study, correct? In no way does that help you want to learn. And two, they don't know what you're talking about. If you're going to do real estate, and I'm going to hire as an agent, and I ask you as my agent, what's this conventional loan thing? And you go, I don't know. I only need to know it for my test. I don't really need to know it now. Does that make you a really good real estate agent?
No.
No.
No. I would like to know. You don't have to be an expert on this stuff, but you should know what it is. An FHA loan,
Right.
conventional loan, all this kind of stuff. So when people say this stuff's not relevant to your exam, please don't listen to them. Just
Okay.
take it as it is, because this is a great example of something that is relevant. So you got this conventional loan. What is a conventional loan?
It's like from a private institution, not necessarily government backed. Again, kind of a 20% down scenario usually.
Good. So Laura, read what I got on the board here.
A conventional mortgage refers to a loan that is not insured or guaranteed by the federal government.
Good, Matthew. That's essentially what you just said, right?
Right.
Yeah. So you got that down. Okay, this means that unlike federally insured loans, conventional loans carry no guarantees for the lender if you fail to repay the loan. So what do they do to make it a little safer for them?
Is that where they require the primary mortgage insurance?
Yep. For this reason, if you make it less than 20%, so people hear this 20% down thing a lot, okay?
Mm-hmm.
That 20% is there for what?
I guess to like start with some equity.
Okay, that's a good word. There's another word I was looking for that comes up on your exam. The word leverage.
Yes, okay.
What do you know about that word? So I'm going to try and work in words. What I want to do is you guys clearly have a good understanding of this. I want to try and take your understanding and really make it specific to the exam. Sound good?
Yeah.
Right.
Okay, so you heard that word leverage before?
Yeah.
Oh yeah.
What
do you know about that?
It's kind of like I don't want to say collateral, but it's like what you have to, I don't know, give you leverage. to kind of like to use the money that you've borrowed
Yeah, you're leveraging
to
somebody else's
finance your
resources.
investment.
Yeah. Yeah, you're leveraging somebody else's resources, but in doing that, you're risking their money. And to do that, they'll say, we'll lend you some of the money, but you got to put 20% down. And you used a word I liked. What was that E word you used?
The equity?
Equity.
Oh, equity, yeah.
What's equity?
It's money that you have that you've, I guess, gained from the property either by paying down the loan or the value of the property rising.
Right. What I like to say is the equity is the money that after you sell your house, you go buy a cookie with. It's the stuff that's physically going to be yours when the house sells.
Okay.
Okay. All right. So what's private mortgage insurance? What do you guys know about it?
I know that you have to pay private mortgage insurance. I think it's until you get 20% down, right? You have to stop paying it at that point. But I guess it's like basically to insure your loan, right?
Yes. Here, Matthew, why don't you read what I got on the board here?
Private mortgage insurance or PMI policies are designed to reimburse a mortgage lender up to a certain amount if you default on your loan and your house isn't worth enough to entirely repay the lender through a foreclosure sale. Most lenders require PMI on loans where the borrower makes a down payment of less than 20%. Premiums are usually paid monthly and typically cost around 1.5% of a mortgage loan. You can normally cancel the PMI once your equity in the house reaches 20%.
Right, which is what you were saying just now, right, Laura?
Yes.
Yeah.
He just said it much nicer.
No, but you said, I mean that's not fair because I had a chance to think about this. I'm writing this on the board here for you guys before we even get on the phone, whereas I'm questioning you. But you clearly have a good understanding of it. Okay.
We're trying, so.
No, you guys are nailing it. I mean, I almost feel like you should teach this, not me. I'm just walking you through, and you're just reciting what you already know. Okay, and
well,
so
you're super nice to say that.
Yeah, I guess I am. You're right. No, but you guys really do know. You know what you're talking about. Okay, so for this reason, if you make less than 20%, when you guys practice real estate, this goes back to what I was saying about what you study for the exam is relevant. You're going to practice. You'll hear a lot of this 20% down thing all the time. Okay, you'll hear about it a lot. And this is what they're talking about, the PMI. Okay, and not only for your exam, but you're going to have to recite this whole thing when you have your first buyer, about the 20% down. I'm going to tell them if you put less than 20% down, you're going to have to pay PMI. So if you can get 20% down, that'd be great. Okay.
Oh, yeah, okay. Yeah.
Okay.
That actually kind of all the way around there, yeah.
Yeah. All right, so conventional loans must adhere to Fannie Mae. Okay, so Freddie Mac and Fannie Mae. You guys heard of them? Now we're getting a little more difficult.
Yeah.
So what are they all about?
They're people in the second, or not people, but in the second mortgage market that buy loans.
Quasi-government institutes that purchase, and Fannie Mae only purchases or can purchase FHA and VA, correct?
Yeah, so you got... So I want to stop you for a second because you mentioned something really important. You said the word secondary market.
Mm-hmm.
What's that about?
It's.
I mean, they buy the loan, say, from the bank.
And then there's investors who give them money for those loans.
If I was... Ready for this? If I was 10 years old, how would you explain that to me?
I don't know. I would tell you that there's...
So here's words that you could use to really make this easy. And I want you guys to narrow down your knowledge. You got a lot of knowledge. So when we get off our call, I want you to really practice, take your information, and narrow it down to 1 or 2 words. For example, secondary market, resale marketplace.
Right.
Okay. And this is the way I'd explain it. And you guys have it nailed down pretty well. I would say I have $10, right? I make you a loan, okay? Laura, I make you a loan for $5. Matthew, I make you a loan for $5. Sounds great,
Okay.
right?
Sure.
What's the problem? I don't have any money to lend anybody else. I'm out.
Yeah, right.
So Fannie Mae will now buy that loan. The secondary market, will buy that loan, and then I'll have money to lend to somebody else.
Okay.
Yep.
It's that simple. And I really want you guys to try and simplify as much as possible, because now you kind of nail it down, but as you know, when you take your exam, you get a little nervous.
Yeah.
And you want things as simple as possible. Do you guys know the history of the secondary market?
Somewhat, actually. Maybe pinned some of it down yesterday, listening to one of your other webinars.
Yeah, it was actually, I did a video about it. Do you want to go, or I'll give you a quick history, or do you want to try?
It was after the Great Depression and banks collapsed, this, that, and the other, that Fannie Mae was created to basically kind of pump the banks back up, and that's where they kind of started loaning kind of on low interest rate loans as well, being able to put down a small amount of money. Our homeowners could be able to put down a small amount of money. It was all federally backed at that point instead of the banks taking all the risk there.
Yeah. Man, you guys are study. You guys are going to do great. Yeah, so secondary market, 1934. What was happening in 1934?
Great Depression.
Right. The 20s was the roaring 20s, Babe Ruth's hit and run, swing dancing, all that kind of stuff. Everything goes up, must come down. Okay?
Right.
So 1934, Great Depression. The only people who could buy homes were people who were really rich because you need these massive down payments. And, and they had these 7 year, to pay things back in 7 years. So you need a lot of money to put down, and you need to be able to pay back crazy interest rates. So it became a country of renters. The poor got poorer and the rich got richer. And eventually the government said, we can't continue like this. So they said, hey, you got to lend people money. And the banks were like, we're not lending money. We never get it back. And then up came the FHA. The FHA was there to say, hey, if we back you up here, if these people qualify, we'll make sure you don't lose any money. And then they started lending money, but they ran out of money. And then the secondary market came to purchase those loans. And without getting more detail, I have a full video on it, which you referenced. Just Google secondary market PrepAgent. You'll see it. But it sounds like you guys got it nailed down pretty well. Yeah, Fannie Mae and Freddie Mac are there to buy those loans in the secondary market. Okay. But first, we're talking about the conventional loan. The conventional loan is that mortgage loan you get your average home buyer who doesn't get it back, which leads us to FHA. What is the main purpose of the FHA? And this is big. People get this wrong all the time.
I want to say that it would be insured. That would be the benefit of it, but I don't.
So can I go? Yeah.
Go ahead.
Can I go get an FHA loan?
Yes.
Does that mean the FHA is making me a loan?
No. You won't actually go directly to the FHA. I mean, it's just
It's insured by the FHA, but it's a private lender.
Yeah.
Excellent. Good. Perfect. People make that mistake all the time because in everyday vernacular, people say FHA loan, where it's actually an FHA insured loan.
Okay.
Right.
But in everyday speech, people say FHA loan, and then what happens, people take their test, say, oh, I'm getting an FHA loan. You're not getting an FHA loan. You're getting a loan insured by the FHA.
Okay.
Right.
Right? And we said FHAs created in 1934. There's very few dates you have to know for your exam. One of them, maybe 1934. One you definitely have to know is there. Show off, right? Yes. 1968. What happened in 1968?
A lot of stuff, or what have you.
The 13th Amendment of the anti-discriminatory.
Okay, well, the 13th Amendment didn't happen in 1968. That happened after the Civil War.
It was, right. But the anti-discriminatory act or was it fair
So-
housing?
Yeah, from the civil rights movement or what have you came
Right.
that.
So here's what I love that you did. You were just like, I don't know what you're talking about. I just know 1968. And that's perfect because you'll get it right in the exam. And you have to promise me no matter what it says in your exam, I don't even care if it asks you your birthday and you're born in whenever. If you see the words 1968, you circle 1968. Promise?
Yes.
Yep.
The answer will always be 1968. I don't care why the sky's blue or what year did man hit the moon. Just circle 1968. Whatever the question is, if you see 1968, circle it. Okay?
Okay.
Will do.
Because that's a big one. All right? And if 1934 and 1968 are in the same question, well, then make me a bad review. But until that happens, go with it, cross your fingers, and trust me. Okay? Now, we do know what it is. 1968, which you guys were alluding to, was federal fair housing. Federal fair housing happened in 1968, and there's a court case of Jones versus Mayer, which was based upon the 13th Amendment. And the 13th Amendment was the one that abolished slavery.
Right.
And this is what I go back to about you guys knowing the vocabulary. You guys clearly know a lot of this stuff, but I feel like you're one of those people who've overstudied a little bit.
Oh God.
And no, there's no problem with that. It's time to narrow down to those key information. Because you've got all this great information. It's like, well, let's focus it down a little bit.
Okay.
Right.
And you can do that with that vocabulary. So federal housing, 1968 was, when they write it was a week after Martin Luther King was assassinated. He was April 7th. The federal fair housing was passed April 14th, 1 week after. It's not just for your exam. 1968 is a huge year in American history. It's one of those you kind of should know just for life. It's probably one of the more important years in our country's history. Okay.
Right.
1934, FHA. Okay. Can I get an FHA insured loan and go buy an office building?
No.
No. Yeah.
No. So what can I get with an FHA loan?
Residence.
Residence. What's a residence?
Family homes.
Yeah, like a single family dwelling. And yeah, like what you have here, whatever, 1 to 4 unit residential. I mean, that would be like a quadplex or something along those lines.
Right.
Would
I spell unit.
qualify for a FHA loan?
Yeah. 1 to 4 units. And that's what I was getting at. Like, it all sounds nice, say family. Basically, what they're talking about is 1 to 4 units. Okay?
Okay.
Now, when you guys go to FHA, there's limits on what you could get. All right? Can you get a multi-million-dollar home with an FHA loan?
No.
What's the limit?
I don't know the limit actually, but I mean it's isn't like an FHA loan kind of basically for kind of unqualified buyers to some degree.
Some degree. So basically, when they ask about limits to FHA loan, as per your region, you guys from North Carolina, and I put the link on the board here. So it says learn more about FHA loans. You go to FHA.com. You see this website down there?
Right.
Mm-hmm.
And you would go to North Carolina, it would look something like this here. Let me see if I could show you guys what it looks like really quick. What do you think? And it would look something like, you guys ready? Drum roll, please.
Yep, we're ready.
It would look something like this. You guys see that?
Uh-huh.
Mm-hmm.
So if you go to the FHA website and type in North Carolina, you'll get to a page that looks something like this. And you see how it lists. And one thing I'll notice, you said it was 1 to 4 units, okay?
Uh-huh.
And by the way, this is true for any state you go to. Okay, we're going North Carolina, but then it lists your county as well. I don't know what county you guys are in, but lists all of them. But you notice how it says single, duplex, triplex, and fourplex.
Right.
Why does it say that?
Because that's what it's up to, is the
One
single to 4.
Yeah, 1 4 units. Okay. Now the other interesting thing, and by the way, this is a screenshot off of the website, just so everybody knows. Okay. So this
Okay.
is nothing that you can't look up. This is not special to me. I literally took this screenshot while we're doing this right now. So this is nothing that you or I or anybody listening can't look up. What do you
Mm-hmm.
see on the top bar of the image?
It's a private company. It's not a government agency and does not make loans.
It does not make loans.
Yeah. All right.
Okay? So once again, this stuff's relevant to what you're actually going to do, right?
Right.
Right. Yeah.
Yeah. And other reason I showed you this is to take what you're learning and put it in very real terms. And hopefully you guys didn't mind that. Hopefully you like that. Moving right along, VA loans. What do you know about VA loans?
That they're for veterans or veteran spouses too.
Well, here's what needs to qualify for it. Current member, a veteran, National Guard, or eligible surviving spouse. Okay, which is what you just referred to. Here's the big doozy that comes up with a VA loan. Can you get an FHA loan with no down payment?
Yes.
You need
No, I said
A low down payment.
Yeah, you need a down payment for FHA loan.
right,
VA,
but VA, you know.
yeah, VA, no money down. That's a big one that comes up. Okay?
Okay. And there's no private mortgage insurance required.
Well, that's where the VA comes in. And the FHA didn't have private mortgage insurance either. That was at MIP.
Right. Okay.
Okay? All right. Okay, you asked me quickly about statute of frauds. What is statute of frauds about?
The statute of fraud, I think, is kind of specific to North Carolina, but it's
That's a national thing.
It's not.
Yeah.
Oh, it is. Okay.
That. Everything we've gone over today, by the way, this is all federal stuff.
Okay.
FHA, VA, that's not specific to any state.
Okay. I guess I thought the statute of frauds had to do more with North Carolina because I thought it was talking about like the contract law kind of.
Still, the majority of the stuff that you learn applies to every state. People talk about state specific, but statute of frauds has to do with writing. Okay? Statute of limitations has to do with time. That doesn't change. The things that gets a little changing from thing to thing is what is that time? Or sometimes what needs to be in writing. That may change state to state. But the idea that statute of frauds has to do with writing, the pure definition of these things, that doesn't change. Does that make sense?
Yeah, I think that the reason I thought it was North Carolina specific is because the things that I have missed on our in-class assessments have all been things where it's been like, oh, well, in North Carolina, it's like this. And so I tend to be missing the contract law pieces, I think, that are from North Carolina specifically.
Right, and that may be true, but this isn't one of them.
Okay.
This is a very federal type thing.
Okay.
All right?
Right.
And they'll ask you a lot of stuff that applies to every state, but they'll put the word North Carolina in front of it.
Right.
Okay, you want to do some questions?
Sure.
Mm-hmm.
You nervous?
Yes.
Very.
Okay. You guys are a couple, right?
Yes.
So you competitive with each other?
I am probably more so.
Definitely when it comes to this, yeah.
All right, game on. Here we go. First question. First, here's what we'll do. One of you read it out loud, and then we'll see if we can do this. Who wants to read this one out loud?
I'll go.
Okay.
Why would a lender be interested in making a government-insured or government-guaranteed loan over a traditional conventional loan? A, faster repayment. B, lower risk. C, easier qualification. D, faster foreclosure. B, it would be a lower risk for the lender, correct?
Okay, Laura?
Yeah, that was the same thought.
Boom. Good. Okay, so we have a lot of these. So we're going to go through them. So if you know them really well, I'm just going to keep going, okay?
Okay.
Perfect.
Okay, so lower risk because the government's backing up. Okay, Laura, your turn.
Okay, the primary activities of FNMA in the secondary market involves A, FHA loans only, B, all types of real estate loans, C, government insured and guaranteed loans, or D, second mortgages and trust deeds paid up to $20,000. I say B.
C.
Okay.
That would be Fannie Mae.
Uh-oh,
Yeah.
Laura, he's winning.
Oh, no.
Yeah, so Matthew, Laura, why'd you say A, Matthew, why'd you say C? What do you guys think? So what was your thinking? So we could get...
Well, I know that it was more than just FHA loans that they, because they also guarantee VA loans. And so that was the only other one that made sense, honestly. C.
Okay.
I chose...
And it's not, all types of real estate loans because they don't do commercial or,
Oh, yeah.
Right.
only
So
residential.
one of the things I liked you did is you were very careful about what I like to call absolutes. Absolutes are words like always, all, never. We prefer words like sometimes, usually, possibly, right?
Yeah.
Because there's always an exception. So one thing you did here is you're going through the question, you saw the word all, right? And you were like, I'm not comfortable with that.
Right.
I mean, there are things there's no exceptions, but typically when you talk about law, there's an exception. That's why we have lawyers. They get paid a lot of money to essentially find the little exceptions in the rules. Okay, so you did a good job there. So Fannie Mae, the primary activity of Fannie Mae in the secondary market involves government insured and guaranteed loans. Okay?
Mm-hmm.
Laura, you all right?
Yeah, I'm good.
Okay. All right. Whose turn?
Okay. Mine. Under the statute of frauds, in order to be legally enforceable, all real estate contracts must be A, on a government-approved form, B, drafted by a lawyer, C, a unilateral agreement, or D, in writing.
I'm going to go with B, drafted by a lawyer.
Yes, I would say B. What's that?
What do you think?
I would say B as well. I know that we can't draft it.
In writing. That's the whole thing about statute of frauds.
Except for the under a year.
Right.
Yeah,
That's the
and I went with B.
Huh?
Yeah, I went with B just because I didn't think that, brokers were allowed to draft a contract like that or what have you. I know that you could make changes to it, but I thought that they had to be drafted by a lawyer.
Well, let me ask you this. Is statute of frauds just about real estate?
No.
No. Yeah, you're right.
So you think of this. This is a much more general term. You're getting into specifics of how it functions within the world of real estate, of which you may or may not be right, but that becomes irrelevant because what they're talking about is a much more general thing here. Statute of frauds just must be in writing. That's all it means. And that applies to things way above and beyond just real estate. The specifics of how it functions in real estate is a different deal. And that's what I meant by things may differ from state to state within that realm of what needs to be in writing, how that works. But the word statute of frauds itself just means writing.
Okay.
Does that make sense?
Yep.
And this is kind of what I was referring to where you went, where I said you might have overstudied a little bit.
Yes.
Because, this was a perfect example where you went into all these details, thinking through all this great information you learned, where I said, hey, let's just back up and learn the vocabulary and know statute of frauds, writing. Boom. Done.
Yeah.
Okay. It's a tough one.
Which of the following requires a CRV? It is A.
Yeah, AVA.
Impressive, man. Good stuff, guys. Okay, certificate of reasonable value is issued by the Department of Veterans Affairs, setting forth the property's current market value based on VA appraisal. Okay, that was great. Didn't think you guys would get that right. You guys have definitely been studying. Are you guys gonna like sell real estate together and be one of those annoying teams with both your faces on the business card, like smiling, like your hand around each other, be like, yeah,
With like glamour shots? No.
yeah, like the glossy '80s glamour shot with the poofy hair and the guy with the mustache, and you guys are all like happy together, and so
Yep,
No, that's not the plan.
I am.
yeah,
A bunch of cats and dogs around me.
yeah, there you go. I mean, that's such an ego trip when people do that. As I say that, as I have my face on every YouTube picture, like on the internet, right? I mean, what a hypocrite I am. But
So you're a hero in our house.
a hero.
Yes.
Wow, that's by your
Yeah.
house. You mean you two?
You are definitely in celeb status here.
Thank you, thank you. I appreciate that. My mother would be proud.
Good, good.
Okay, so get the pictures when you guys pass, but just don't do the glossy thing and don't do the bench park act.
Okay.
Yeah. Okay, next question. All right. I think you guys are going to get this one. Can you read this one out loud, though, for people listening, though?
Yep. Which of the following would not require a down payment? A, qualified veteran, I would assume.
Okay.
A CalVet. B, FHA, C, VA, or D, conventional.
The answer is C.
Yeah.
Okay.
C, a VA loan.
Next hint for your exam. If you've never heard of it, don't circle it. Okay?
Okay. Yeah.
All right. Why is that?
Because it's probably not the answer if you haven't heard of it.
Which is why, when we started this, I said, do vocabulary and not the questions for your exam. Excuse me, don't focus on practice questions. Because now you would have seen that, and it's not correct information, and now you've heard of it, and you've heard of bad information.
Yeah.
Yeah,
Where if you
right.
stick to vocabulary, the only thing you're learning is correct information.
Yeah, no, that's true.
So this kind of emphasizes that point of why I said, please just, in these precious hours before your exam, stick to the vocabulary.
Okay.
Yeah, very understandable.
Yeah, and hopefully that kind of explains that point a little bit, because you saw, like, I've never heard of it. Well, if you keep doing questions and going through every answer, you would have heard of it, and then it's a problem.
Right.
Okay.
Okay. All of the following are characteristics of VA loans except A, used for housing or farm property, B, lower interest rates than conventional loans, C, okay to use for the purchase of rental units, or D, guaranteed by the VA. I feel like C.
Yeah, I think it's C as well. Because you only get one chance, or you only get one card.
Here,
What is that?
expand upon what you were saying. You're making a great point there.
Yeah, you only get one kind of, you can only have one VA loan or what have you. I mean, you can defer it at some point in time and take it out again, but it's only one at a time. So why would you do that for rental units in a way?
Well, also, you're
Right.
not allowed to get a rental unit. It has to be.
Yeah.
So
Personal
basically,
Yeah.
the VA's purpose is to say, you've served our country, we're very proud of you, and as a thank you, we're going to make sure you could have a home. It is not there to
Right.
make sure you could have a big business and start some multinational company. It's there to ensure that the people who served our country, when they come home, they can get a loan so they have a place to live. That's a little bit easier than if you're an average citizen. So that's the big thing. It's meant for them to have a home. Now, what is a home? 1 to 4 units.
Right.
Here, let's go this one.
Oh, sorry, was it my turn?
Yeah.
For FHA purposes, acquisition costs include non-recurring closing expenses. Which of the following would not be included?
So what are the answers?
A, discount points. B, FHA appraisal fee. C, credit report fee. Or D, impounds for property taxes.
No.
So this looks like a confusing question, right?
Yeah.
Can I simplify this one for you? Because it's actually much easier than it looks.
Yeah, please.
What does this word mean?
Non-recurring doesn't keep happening.
Yeah, one-time deal.
Does this keep happening? Or is this one time?
No, yeah, just one time.
Does this keep happening or is it one time?
One time.
Does this keep happening or is it one time?
One time.
One time.
What about this one?
Yeah, that keeps happening.
Every year.
Okay.
So you see how kind of when you look at it, when I actually broke it down there like that, you're like, wow, that's actually a lot easier than it looked.
Yeah, no, I actually really appreciate that, especially because whenever there's a thing where it says, like, which one is not or accept, like, those questions trip me up. I have such a hard time because I instantly look for something that is, and then I get stuck on that answer. So I like to be able to do that. I'm glad that you pointed that out.
Yeah, so what I was trying to do there is look for the key word. There's a lot here about FHA, points, appraisal. Well, what about our basic grasp of the English language, right? Non-recurring. Right. Okay, well, that's reoccurs, that reoccurs, that reoccurs. Oh, well, excuse me, that does not reoccur, this does not recur, this does not reoccur, and this does. Very simple.
Right.
You know what, honestly, even if I went like this, you could probably get the answer. Because it's like one of those kids are doing their own thing. Which one's way different than the others? Actually, that's not fair. If I went like this, if I said, ready? And this is what I mean. If I look for the keywords when you do these questions. If that's all you saw, you'd see this. Then you say, okay, let's take out the not.
Yeah.
Right.
Which one of these is different?
Or I'd say, which one's reoccurring?
Right.
Okay, and that's how I want you to mentally see this question. So if we look at it again, and this is just test-taking techniques. If you could start to cross things out, like I just did, it'll be a lot better than you just trying to read the whole thing and go through it. So I said, okay, what word really sticks out to me here? This one does. Oh, but there's a not. Dun-dun-dun-dun. And here's another word which is very scary that I'm going to throw out at you, okay? They love doing the exam. You ever heard the term double negative?
Yes.
Yeah.
What's a double negative? Negative, negative.
Yeah.
Double negatives cancel each other out.
Mm-hmm.
So when you take your exam, this is all you should see.
Yeah. That's
right.
Huge for me.
Right? And doesn't that make it a lot easier?
Yeah.
And I really like doing this question with you is when you guys first looked at it, there's this feeling like, oof, wow, what's this all about? But when I broke it down, you were just like, okay, piece of cake, right?
Right.
Right? And there it is. Non-recurring is only paid one time. And there you got your property taxes. Boom. Okay?
Okay.
All right.
Good deal. This is good.
Yeah. All right. All of the following are considered advantages of FHA financing, except a low down payment, long-term loans with lower payments, easy to qualify for, buyer is protected with FHA insurance. All of the following are considered advantages of FHA financing, except.
I think it's B.
Okay, Matthew, what do you think?
Yeah, B as well.
It's the buyer isn't protected with the insurance.
Oh, yes.
It's the loan that's protected.
That was a tricky one, right?
Oh, yes.
And
yeah, you kind of just
FHA insurance, and you're like, yeah, FHA insured loans. That's right.
Yeah.
Right. And so what was tricky for you here, okay, is you guys know all this stuff. Oh, FHA insures lenders. That's totally right. It's protected by FHA insurance. FHA doesn't make loans, it insures loans. So obviously that one's fine, right? That's what you were thinking, correct?
Yeah.
Yep.
So what you did, you saw this, and you're like, that answer is great. FHA insurance, correct? What you missed, the sneaky part they sneaked in was here.
Yep.
Because the truth is, the buyer's not protected. Who's protected?
The bank.
The lender.
Yeah,
Exactly.
the lender.
Yeah, so that's one of those sneaky ones, right?
Yes.
Sneaky.
Very sneaky. I don't like it.
Yeah.
Okay, who would be responsible for paying the 1% origination fee on the FHA loan? A, escrow officer, B, the seller, C, the buyer, or D, the lender. I believe it's B, the seller pays the origination fee.
What do you think?
C, the buyer.
Buyer.
The buyer.
Yeah, the
Yeah.
seller has nothing to do with getting the loan. The seller's trying to sell their house. How you pay for the house, they don't care.
Yeah, that's true.
I mean, I guess anything can be negotiated,
Yeah, but
but
the buyer is the one that's taking out the loan. They're the one that's going to have to
exactly.
up for the origination fee. Yeah.
Right. And I say anything can be negotiated, going back to that thing of the rule about the absolutes, always never. Because I guess you can negotiate, I'll get this, but you got to pay my, origination fee, which I've never heard before, but anything's possible.
Hey, Joe, when you do the editing for this, can you edit it so I got all the questions right?
Yes, totally. That was my goal. Obviously, you didn't even have to
That would
ask.
be perfect. Thank you.
Right? I mean, come on. I'm even going to edit every time that he answers and it a little wah wah. Lame. Just put that in there.
Great. That's
Totally
excellent.
going to fail. Yeah. Yeah, and every time you answer, like, oh my God, she's so smart. I am truly a better human being for her voice, And then when Matthew answers, I'll be like, I just got dumber. Thanks, man. I just got dumber, right? Yeah.
Exactly.
You want me to edit all
That's
that?
what we're looking for, Joe.
There you go. Totally. Right? Yes. Matthew, aren't relationships great?
Yeah.
There you go.
No.
Great.
There he is. Correct answer again. C.
Okay, here we go. What do you guys have the answer to this one?
Okay, a purchaser of a home 5 years ago is now interested in securing an FHA loan. A salesperson would most likely introduce the homeowner to A, a conventional bank or savings and loan, B, an appraiser, C, the FHA, or D, the Federal Home Loan Bank. I feel like it would be B, the appraiser. Like they have to find, I don't know, 5 years ago?
A.
Good. Why'd you say A?
I mean, if they're going to if they're looking to, obtain a loan, they've got to go through a conventional bank. I mean, granted, it might be an FHA insured loan, but they still have to go through a, accredited lender.
Perfect. So remember, I said it says FHA loan, but what's it really? FHA insured loan. Appraisers don't do this. Do you go to the FHA?
No.
No.
You got to go.
Yeah, what are you saying?
Yeah, you got to go through a lender of some sort. So.
There you go, Matthew. Sorry, Laura, he got that one right.
Yeah, I know.
He's doing great. Okay, here we go. Moving on.
All right. The practice of charging discount points on FHA insured loans is because the lender desires to equalize the yield on FHA loans to the yield on conventional loans, create a competitive environment between FHA loans and conventional loans, close the gap between FHA loans and conventional loans on the secondary market, or D, all of the above. Discount points. I think they're all the same answer, so I'm going to go with D, right?
Okay, so that one's C. That one's a tougher one. Okay. It's all about their yield. They're trying to close the gap to make things a little better for the secondary market.
Yeah, okay. Actually, I could see that.
So I'm at the end of my questions. Actually, timing's perfect because we've been doing this for an hour.
Mm-hmm.
So how are you guys feeling?
Pretty good. Pretty good. I mean, honestly, the advice on studying vocabulary is I've taken that to heart, because, yeah, we tend to get really in-depth really quick, and we can get hung up on one question, for easy 15, 20 minutes discussing. But, again, if you know the vocabulary, you can kind of rule out other answers and make if nothing, I don't know, lack of a better term, an educated guess at something if you don't know it.
Right, that is true. So, and I think you guys are really well prepared. Now, is Sunday your state exam or is it your class exam?
Our class exam.
Oh, you guys are way over prepared. You guys are going to do great. I don't know why you're nervous about that one. When do you take your state exam?
We have to, I guess once we pass the class exam, they'll give us information on how to go about taking the state exam.
What's so great that you're so prepared for the class exam is that the state exam is going to be a piece of cake for you.
I hope so.
It will be. It will be. And remember what I say, just don't stress. Don't tell the world you're studying. It's between you and Laura that you guys are studying. Nobody else needs to know. And one day you'll pass. And if you pass the first time, proud of you, great, and they'll be happy. But if you don't, it's not the end of the world. Nobody's going to ask you how many times it took you to pass your test once you're selling real estate.
Right, it almost becomes a badge of honor if you don't pass the first time.
Yeah.
Yeah.
Yeah. I mean, it's amongst you two. You guys are working together. You guys are motivating each other. Sounds like you're having a good time preparing, and that's all that matters. And just relax and do it. And eventually, you'll get there. But I think you guys will get there sooner than later for sure.
Well, good deal. A lot of it is contributed to you and PrepAgent. Seriously.
Yeah, thank you.
Well, thank you. Maybe I'll send you guys a hat after you pass.
Excellent.
Nice.
It's my little hat I have in all the videos.
Yeah. I love it.
Yeah, trademarked because I'm bald. So there you go. Well, all right, guys. Well, good luck. As for me, this is Joe from PrepAgent. And if you have any comments, if I say anything wrong or didn't do anything right, just let me know in the comments below. Okay, thanks,
all right,
guys.
thanks so much, Joe.
Okay,
thanks, Joe.
Talk to you soon.